Alright folks, this is Gatos FX, your mentor Robert here. This make sure you follow me on my Instagram page Gatos FX, where you can see my charts, you can see my videos, and you guys, I hope probably you could learn something. So today we are going to backtest this trade which I took last week, last Friday. It was USDJPY, and by the time I literally had closed with 240 pips. So we are going to see how this trade was formed. So let's get the chart now. This was USDJPY. I jumped the weekly time frame, and we experienced that in the weekly time frame. Sometimes when you get in the market, you really don't have necessarily to go all the way long to see what happened in the past. Yes, it is good to go there to see what happened, but sometimes we can focus on what's happening now. What's happening now is literally very, very much important because it is what's going to give you the trade around this week. So, when I was looking at USDJPY, first of all, I focus on the order flow, institutional order flow. Where do the order flows? Because this is going to tell me whether we are bullish or we are bullish in the right time. As we can see here, the market was really making higher highs and higher lows, higher highs and higher lows, higher highs, and literally we hit lower low. This was the first confirmation that the price has changed the character. The change of character, we can literally put it on the wick, on the body candle closure. So when I saw this was the first confirmation that the bullish trend had ended, and now we expect to continue with the bearish direction. That was number one. But also number two, the market has already started to print the bearish order flow. And little there were some inside formations. We had lower low, lower high, lower low, lower high, and then boom, we had it lower low. So based on the conference, here we see that the weekly time frame is bearish. So if the weekly time frame was bearish, and when I was doing the sheets, I went to another lower time frame, which was daily. We are going to backtest and see how this trade was formed. How did I manage to take this trade? Okay, so let's go to the chart first. The number two, when I entered to the daily time frame, the first thing I had to look was the order flow. Does order flows move in sync with the weekly time frame? Here we can clearly see the market was making lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low. So there were no doubt the daily time frame was also bearish. Daily time frame is also bearish. We don't have to go against the order flow. If the higher time frame is selling, guys, you better sell. If it is buying also, you better buy. You'll be in a good position. We want to take the trade with the highest probability setup, not just a random setup. Okay. So after seeing this daily bearish, I was very interested. You see, this nature of the break of the structure, which literally was the cause of the change of the trend. It was an impulsive nature. It was an impulsive nature. And I normally say that when you see there is a break of a structure with an impulsive nature, price will not retrace back to this order flow or any other above zone. Will normally end up around this area. So it depends on along this area what are the other structures which you can find out. So when I was in daily, everything almost ended here in the daily time frame. This trade did not have to go to so many lower time frames. So here, when I was daily, I literally also observed that we have had another break of structure around here. We have had another break of structure around here. This was also break of structure. So when I was looking at this pair, it was literally around this area. Yeah, some of the candlesticks were not really printed. As you can see from my Instagram page, here is where we were when I was printing this page. I was analyzing this pair. So here in the daily time frame, what else I was observed? Around this break of structure, which was an impulsive nature, I asked myself whether around this area there are any features of support and resistance. I looked at it, if we can find the features of support and the resistance. And here we found out. We have this area offered as support, resistance, support, impassive breakout, weak rejection, some consolidation, lots of consolidation here. So when you find these features are in this area, we don't doubt that this area is also qualified to be called as a support and the resistance. And you know, support and resistance is also part of the liquidities which we are using to get the turning points or to take our trade. So I will write down this is the daily support and the resistance zone. This is the daily support and resistance zone. Already I had figured out in my mind that when price approached this area, this is where I am going to take my sell trade so that I can have the continuation. You know that the previous support becomes a resistance when you break the structure. This was the previous support. When we break the structure, it becomes a resistance. So I was expecting a second push around here so that we can continue with being bearish. But where do I exit my trade? Where do I exit my trade is very, very important. Whenever I enter a trade, I must figure out where do I close the trade. Looking at this area, this zone is also a support area. This zone is also a support zone. We have support this area, support. So literally I will quit or I will close my trade this area once it approaches this area. This is the other way of looking at it, but the other way around, I can mark it as a daily lower low. I can quit here at a daily lower low. This is a daily lower low. So once price reaches this area, I will close this trade. Okay. So the question now comes, where do we enter? So this is the zone. You know, sometimes I take my trade when the price once reaches this zone, I can place my sell trade at the lower line of the upper zone. Only if the number of pips is less than 40 if it is weekly, monthly or daily time frame. If it is 4 hour or less, I don't take a trade which has a drawdown more than 30 pips. This is my principle, okay? So this zone hole had a number of pips of 109 pips. So I cannot take a trade with this very, 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 very big number of pips. So I will go to the lower time frame to see how I can literally minimize my stop loss, but as well as capture the liquidity which are found around this zone. You know, when you are trading in the zone, here is the principle you have to know. You have already marked the area where you're going to take your trade. So when you go to the lower time frame, nothing below your zone or above your zone, any other form of liquidity found below your zone or above your zone, you just ignore them. They are just noise. If it is below your zone, that means those are the fake liquidities. If it is above your zone, your whole trade process have to be formatted again, because if price crosses above, we are no longer bearish, we are now starting to look for being bullish. So I will go to 4 hour. I will go to 4 hour and see how I can minimize my zone. So here, coming to 4 hour, I will probably minimize this zone up to this area. Yeah, this is making sense. So measuring the number of pips is still 62. I don't take a trade with a 60 pips 4 hour. So I went to 3 hours. I minimized up to this area. I am very confident with my zone, so I don't doubt. 3 hours at least it has 40 pips, for the trade which I was figuring out from the daily time frame. Remember, this trade was formulated from the daily time frame. So taking a trade with a drawdown of 40 pips, if it has been figured out from the daily time frame, with respect to my zone-to-zone trading strategy, that's okay with me. That nothing wrong with it.
102-100 win in.
So I can literally take that trade. So let's get to the daily time frame, and we were here. We are backtesting. We were here. We were here. Yeah, when I was formulating, when I was doing analysis with this trade. So here I placed my stop loss. It was about 37 to 40 pips, which was okay. It was okay. Okay, so let's play the price and see how things were moving on our side. Let's see how things moving on our side. Okay, when we play the price now, this is how it was formed. As you can see, even though the price jumped in, but we were safe because we took 40 pips stop loss. Price came in and we were not stopped out. The price is still continuing to go down. So when I took this photo, it was already 240 pips on the last Friday. Today is Monday, the second week of January 2023. So this is how this trade was formed. So you guys make sure you follow me on Instagram and so that at Gatos Effects we can learn more and see how we take this trade. Okay, see you next time. Welcome to Gatos Effects.